Hey everyone, thanks for the welcome to the live stream. I am here with Daryl again. Yesterday, he co-hosted the watch party for NVIDIA, and it was really interesting to watch that stock announce their earnings and then see that stock go up a bit. It really maintained the rise that it achieved yesterday. The earnings were overall really good, and the stock has been rising really well over the last month. So congratulations to NVIDIA stockholders. You did well today. So it was a good watch party yesterday. I think from a live stream perspective, it is the biggest live stream I've hosted. So thanks everyone who attended. And thank you, Daryl, for joining. How you doing today?
Doing pretty good. Thank you.
And on Costco, what's your background with Costco? How long have you been an investor? For how long and so forth?
And that's to me.
Yes.
Okay, I first got in December of 2023. I bought
Okay.
in just like Nvidia we talked about yesterday. I was buying at all-time highs at that time, and a little bit later I'll go into that and show you some charts on what I did and why I chose to enter it at that time and how my trades have gone so far.
Perfect. Yeah, it's going to be interesting. So Costco has benefited from, at times this year, we've seen investors want to go to consumer staples, kind of get away from risk. If you, I'm sure you recall, um, the S&P at certain times just really dropped. And when you had the S&P drop 12% over just a few days, boy, people really rushed into consumer staples to get out of harm's way, so to speak, on these growth stocks. Uh,
Exactly.
so that's really worked for consumer staples. It's Costco is one of the more expensive stocks, right? It's up there. It's number, geez, it's got to be in the top 20. So Costco is down here at $447 billion of market cap. Its revenue is 264. It lags Walmart, who's bigger. The Walmart's like, geez, almost three times the revenue amount at 685. Not quite three, but probably closer to two and a half. And Walmart's at 780 billion. And then of course, Amazon is in their ecosystem. Amazon's at 650 billion dollars, and they are a 2.2 trillion dollar market cap company. As I'll show a little later, the fundamentals, Amazon provides far more cash flow than Walmart and Costco. So there's no big surprise that Amazon's worth more.
Yes.
And plus, it's strategically in a better part of the industry, if not a new industry, where you have e-commerce versus big box retail. So those are the players. In Costco, to their credit, it's been a real consistent performer for a long time. You look at the 1 year, 25%, and it pays a small dividend, I believe. Yeah, 0.52%. Charlie Munger loved this stock.
They do
He
pay
loved,
special dividends on occasion, like every couple of years or so. Pretty sizable
do they?
special
Yeah.
dividend, ten
So the
dollars a
excess
share or
profits,
so.
they
Yep.
just they dividend them out. Interesting. Over the 5 year, this stock is just, man, beautiful performance. 227%. Just a real good performer over the
Yeah,
max.
their subscription model kind of starts them on January 1st, halfway to their goals, their income goals for the year. They're already halfway there.
Their profit is in this the membership
Yeah, a
program.
lot of it is.
Yeah, that is pretty genius. I have
Yeah.
to admit, my family, we've had a Costco membership forever, and we don't take that many trips to Costco, especially now that my sons are 20 and 25. But when we do, it really saves money. So we don't cancel the subscription.
Yeah, I was a member when they were still Price Club. That
That's
tells you
right.
how long I've been a member.
There was a merger, right? Price Club and who else?
I'm not for sure.
Yeah, there was a merger because I remember that Price Club brand went away. So, all right. So the earnings, everybody, it's supposed to drop any second now. It's going to drop right at 4:15 Eastern, and Daryl and I are trying to monitor to see when it's going to drop. I've already done some homework on my analysis. You're going to hear two different perspectives on Costco. I'm going to take the side of more long-term investor focused on the future free cash flows, trying to find intrinsic value of Costco based on cash flows, and also looking at earnings per share, trying to forecast what they're going to do from an earnings per share perspective, and price the stock and say this stock based on its cash flows is worth this much, and based on earnings per share it's worth that much. And Daryl is going to take us through more of a technical review and look at technical analysis, which is really interesting, and see how the stock's traded so that you get the best of both worlds. You can get a point of view of, is the stock discounted and can you make money over the long haul? And then from Daryl, you'll hear when are the best times to buy it. So you're going to get both worlds. And any news on that earnings yet?
Yahoo has sent up an alert, but I haven't seen it filter through on Seeking Alpha.
Okay, here we
And
go.
yeah,
It is out there.
okay, good.
So we got our hands on the earnings. Thank God. All right. So Costco Wholesale Corporation reports third quarter year to date. This is up today. Very good. They're up in Washington near Seattle. And this is their third quarter. So it looks like total growth for the year to date is 8%. And for the quarter they just closed was, and they have an adjusted and then they have a non-adjusted. So I'm going to go with the non-adjusted. So for the quarter, they grew 5.7%. And for the 3 quarters, they grew 5.9%. They want to show us an unadjusted, I guess, for currency and so forth, but I don't take that into account. It's like some years it's going to help you, some years it's going to hurt you. So roughly a little less than 6% growth. All right. I'm going to kind of scan here, see if there's anything in particular. Now, one thing is they're growing internationally. You have international, but the growth wasn't that great. 3.2%. Looks like the currency really hurt them there. If you didn't have the currency headwinds, you would have grown 8.5. But the growth isn't great in international. The growth is best in the US. I guess people were stocking up on Costco stuff. Okay. All right. So we've got the income statement up to bat here. The profitability of the company did advance nicely, an additional 50 cents per share. It jumped in the quarter, which is a very good rise. That's 11-12%. For the year, they're up over
Can
a
you zoom
dollar.
in just a little bit?
Yeah. Glad you mentioned that. Let me change something else. Get out of the way here. All right. So it looks like their earnings per share is growing nicely. The 50 cents, if you look at a percentage, that's growing at 12 to 13%. And for the year to date, they grew for the first 3 quarters $1.07. So that's really good growth. Again, 11-12% growth. Excellent. So their top line is growing at 6, but the bottom line is growing faster, 10 to 13%. Nicely done. I'm sure their cash position is good. It certainly is. 13.8 billion, up from 9.9 billion. Short-term investments are there. So they have a total of close to $15 billion in cash and short-term investments. See how much debt they have. So they have a little bit of debt. No big deal. They can pay off that debt immediately if they wanted to. And they have a cash surplus. All right, cash flow. Cash from operations did go up about $1 billion. Nicely done. That's about a 12.5% increase. Very good. And what about CapEx? So here's the CapEx line, 3.5 billion. So they did about $6 billion of free cash in the quarter. And this is for the 3 weeks. Take that back. So this is for the 3 quarters. Year to date, the cash flow, this is a summation of 3 quarters that they've completed. Their cash from operations is 9.4 billion. CapEx is 3.5. So net, they're at like 5.9 billion in free cash flow. And I'm going to note that number. So the numbers look really healthy, as they oftentimes do. They're just really consistent. So good job, Costco. So the cash looks good. Cash from operations look good. Now they've always been really consistent, but as you'll see in my valuation, I've never been a Costco stockholder because I just thought I've always looked at it and thought, man, it's priced kind of expensively. Okay, so I wanted to note how much cash they had so I could update my valuation. So that's going to be 14,850 in cash, and then debt 5.7 and 7 in debt. Okay, so initial comments is this is what Costco is all about, really consistent performance, and they came in, I think their growth rate is as expected. It's a single digit, sometimes high single digit grower. They are pretty sizable, but they came in. What are your impressions on the earnings so far?
So far, I think they're looking pretty good. They do what they do.
They certainly do. So not much action in the after hours. The stock is down 0.17. I don't think that's a big deal.
Yeah, I'm going to talk about that a
21.
little bit when I show some charts.
Okay, so I updated my.
If you can zoom in on this as well.
I will. Let me kind of get to a little more data that I need. And this one is February 16th. I'm going to try to get the trailing 12 months cash flow, and that's going to be in. So the first 3 quarters, which were 1, 2, and 3, were, I have those numbers, but I need the 2 quarters before, and that's 1381, 1937. Okay, I have that number. I'm just adding up some numbers to get to the free cash flow. So 18419. Okay. So they're trailing 12 months free cash flow is 9254. And their revenue is growing by 8%. So
Are
I'm going
you able to zoom in a little bit?
Yeah, thanks for the reminder. Let's see here. Okay.
Perfect.
Okay, so now Their cash flow is actually growing more towards 10 to 13%. So I'm gonna change that to 10%, and then terminal value, I'm gonna keep at 4. That changes the forecast. Here's the forecast of cash flows for the next 4 years growing at 10%, and then terminal value growing cash flows beyond year 4 by 4%. This is a super solid company. I showed that they have more cash than debt. So very low risk company, very consistent. The value of all those cash flows discounted by 8% is 278 billion. And I'm going to add cash. That's going to be a new number. That's 14,850,000,000. And I'm going to have a new debt number. And that's 5,717,000,000. So the equity value, which takes intrinsic value cash flow plus cash minus debt, I get to $287.6 billion of equity value. Market cap of the company is 447. So based on cash flows and the best forecast I could put out there, the stock is priced 36% too high. Now, is that rational? Yes, because Costco is such a dependable company, such a well-known name that that kind of transfers over to investors. Investors are comfortable with Costco, especially if they've owned it for a long time. Their cost base is really low. They're not going to sell. But as a new investor, you look at the stock and it looks a little expensive if you look at cash flows. Now let's look at earnings per share. So earnings per share, and this hasn't changed as of today. Consensus is they're going to do, and this is for the next year, the next fiscal year. They just finished their third quarter of this year. They'll start the new fiscal year after they complete the current quarter. It's going to be $20.36. I'm going to give them a PE of 25. And the PE, this stock usually trades for a higher PE, but it's a single digit, grower. Margins are really low. I get there's a premium because people are very comfortable with Costco, but I can't go beyond 25. That's what I'm giving Google. That's what I'm giving some really good companies, okay, that are growing faster. So I can't go beyond 25. And the growth rate on that earnings, it is growing better than 8%, but I'm going to be conservative. Just go with 9. So earnings per share doesn't support that, the current stock price. I get to a stock price that's only $554. Here's the formula for intrinsic value based on earnings per share. So earnings per share has the stock price priced 45% too high. When I combine the two, Costco is priced 39% too high. If I weigh the cash flows and I weigh the net profits, that's where I get to. Any questions, Daryl? Any comments?
Nope. And that pretty much pans out with everything I've ever seen or any evaluations that I've done. They definitely traded a premium.
They do. And in a way, they deserve it, right? It's the brand. It's the consistency. It's, I think people are going to expect they're going to do the same thing they just did in this earnings for the next 10 years. So that's Costco.
And when the economy's challenged, they kind of participate with Walmart. They tend to pull in, value conscious consumers.
They do. The one risk that I see, right, is Amazon is changing the world of retail. They've been changing it for the last 20 years. I don't think anybody's going to argue with me. And if I look at our consumption, and I don't know that I'm different, 20 years ago, we would go load up at Costco because it was just such a good deal, right? You'd go load up on all, especially like the paper goods and all kinds of stuff. But then now Amazon, geez, like when you're Amazon Prime, like my wife and I were on the phone earlier, and she was going to order something and they were going to get it to her in the next 2 to 4 hours. Wow, that's really good. So whether you're ordering, you know, paper goods or whatever you're ordering on Amazon, that service is getting so good that I think it's a threat to Costco. I think it's going to limit Costco's growth because families like ours, we don't need Costco as much anymore. It's not like I'm getting that great of a deal that, and FYI, the Costco's near my house. It's, you got to like deal with parking. You got to go in, show your membership card. You got to walk through the store. Lines are usually not the worst, but you don't get out in 5 seconds. But on Amazon, boy, 3 clicks and you're done. And you get to search really the catalog of the world when you look for a product. So I think that'll be a headwind for long term on Costco. For me as an investor, for me Costco's a sell. It's not a buy. I'd rather buy other stocks like Amazon, like Mercado Libre down in Latin America, like Alibaba in Asia, because those companies are growing in the e-commerce realm, and that is expanding faster than retail. I think retail is limited. And although Costco could be the kings of big box retail, your kingdom is getting smaller over time, is my point. So back to you, Daryl. I don't know if you want to cover technicals now.
Sure, we can do that.
All right, I'll take my stuff off the screen and we'll pop yours on. And good to see you, Shadow Guy. And, the international expansion, one thing I would say is the way we consume in the US is not exactly how people consume around the world, right? We're known for consuming a lot. Oh, that's weird. It can't. There we go. Okay, we're on. So I know down in Mexico, they're really like Costco down there. But I don't know about other countries. I don't know if they would buy those mass volumes. Anyway, back to you, Daryl.
Okay, I thought I would start off with fast graphs because you can see over the last 20 years that Costco is traded at fair value, which is this orange line with the triangles on it.
Uh-huh.
It is only traded fair value one time in this entire 20-year period.
Wow.
So that's,
and all other times it was trading at a premium.
yes. So the blue line is the market, or the market multiple. That's what the market normally prices Costco at. So it traded under that market multiple for many years, and then pretty much crossed over in 2015. And since that time, it's traded above the market multiple.
Mm-hmm.
And it's actually trading at a PE of 57.24 right now, with earnings growth over this 20-year period of 11.3%. So it definitely trades at a premium.
And I think investors know that. I'm not an investor that likes to buy at a premium. And FYI, we all get to pick kind of like the stocks we get to invest in. I am not excited about retail. I'm excited about Google's AI business and the robo-taxi business. I'm excited about Meta's expansion into AI dominance in social apps. To me, that's far more interesting. It's more technology oriented, and it's really it's a more interesting topic of the times. So for me, I don't want to pay a premium because I don't even like investing in retail. So that's me. That's just one investor and one investor's point of view.
I tend to agree with you. I've tried several retail companies and I have not been happy with them and moved out of most of them. The basic reason that I actually moved into Costco was because I had a couple of investors that I was working with that would really like to buy Costco. and they always talked about it being so expensive, and they kept waiting for it to come down to about 350 to $400. And I told them if they're waiting on that, that's probably never going to happen. So I was having that discussion with them in this time frame at the end of 2023, and I told them if they, want to buy, just manage your risk, and then you can get out of it if it goes against you.
Hmm.
But as long as it's working for you, then do what
Right.
you want to with it.
Yeah.
I apologize. I have this nagging cough. I'm going to grab a cough drop real quick.
No problem. No problem. And yeah, as you construct a portfolio, right, you could have really dependable stocks. And I mean, the performance of Costco is just frankly to me surprising. I'm like, you know, I don't I don't get Costco. Costco doesn't get me, whatever.
Yeah.
Um, I understand more like the rise in Meta or Uber. Those stocks make sense to me. So following the principle of don't invest in something you don't understand. I don't understand how Costco continues to trade at a premium in an era when Amazon's just crushing different companies. The latest being UPS and FedEx are dealing with big losses in revenue because Amazon is handling a lot of the deliveries themselves in order so that they can deliver fast. And it changes consumer behavior because you don't have to go to big box retail anymore. You can just order at home, order as you need. You don't have to stock up and have a giant, room to put your inventory in. You just buy it as you need it.
Right. So when I was looking at that with these two investors, I noticed that Costco was in a consolidation pattern here.
Hmm. And if you can make that a little bigger, it's tiny from my point of view. There we go. Okay, now I can read the numbers.
Okay, so it was in a consolidation pattern. And then one of the things I was looking at, if I just draw a horizontal line across here,
Hmm.
there's several times that the price got up to this line
Hmm.
and then backed off. So it was tested from underneath the line several times. It was finally tested again here about four or five times altogether. And when it broke out,
It really
that's when
broke out.
that's when I decided to move in. When I saw it break five times resistance, then I knew it could be a real
Hmm.
breakout.
Nicely done.
So anyway, the green line is my cost basis. It's about 712, and after dividends, my net cost is just a little under 600.
Great. And are you buying and holding Costco or are you trading it? Are you getting in and out or are you just buying it and
Yeah,
holding it?
I've traded it. I'll show you that here. So I have traded it a total of 13 times. I've made 5,500 in gains
Hmm.
on Costco. I've have losses of 65. So that's basically where I sold this one tranche at a loss. All the rest of my trades are in the green.
Nicely done. What's a typical period of time that you hold the stock before you recognize the gain?
So I've had it for, it'll be 2 years. So 13 times in 12 years. So every couple of months.
Okay. And you just pick the right time to sell. You wait for it to come back down, and then you buy at a lower price. Is that your intention?
That's exactly the case.
Perfect. Well, nicely done. Your
So
win
I
rate
can,
is
yep, I have a 92% win rate, and my gain loss ratio is $7.03 for all my wins, and for every dollar I've lost, I've made $7.
very good. So it looks like Saeed is on. He's out of London, and he says that people in London do like Costco, and but
So
Amazon is taking over.
their last earnings, they actually
Mhm.
dropped about 6% and then dropped down about 12% altogether after their last earnings. And the earnings before that, they dropped about 8% as well.
Mhm.
So last Friday, I actually trimmed them. Maybe I can make this a little bit bigger here. So I trimmed them a little bit on Friday, suspecting that they might drop down. And the reason for that is we have a decaying RSI. We had a RSI or a PPO crossover here, moving to the downside. So that's why I decided to trim.
Okay. So now looking at the next, I guess, month or two, what are you looking for the stock to do in order for you to buy?
I'll wait for these, like the PPO to cross over from the bottom to the upside, like this right here.
Mhm.
So I'll be looking for that and watching for a movement up. I'll be looking for a PPI to RSI to bottom out and start its uptrend.
Very good.
So anyway, I apologize for this cough. It's horrible
No
today.
problem. Not your fault. Um, good. So looks really good. Congratulations on the success there. Looks like any questions from anybody on? We've got 143 people on the stream. So any questions you guys want to ask us on Costco? I'll give it a minute to queue up some questions. Shadow guy. So the policy to join in the UK, anyone can join. Is there a limit on who can join in the UK? That's kind of weird. Here in the US, right? I think you can you just sign up and you pay your fee and you're good to go. We've been members so long, I forgot when we originally got signed up.
It used to be by like an invite, or you had to work for a company that they had connections with. Used to be a lot stricter. In the United States, it's not that strict anymore.
So UK, only certain professions can join. That's interesting. That is really interesting. I would have thought that they just want to open it up to anybody so you can get as many customers as you can. Well, the stock is not doing anything in the after hours. It's up 0.16%. We had kind of a mixed market today with, some stocks doing great, like Nvidia, and I know Elf Beauty did really well. But the market, and I don't think we have a pre-market number yet. Yeah, the futures aren't telling me much. All right, so let me see if there's any questions on Costco. If we don't get any questions on Costco, we can take a peek at Dell and see what it's doing. Dell Computer did announce it. Do you want to show something else, Daryl?
No, I was just looking at the after hours. So it did jump up to 1,025, but it came straight back down to 1,013.
Okay. All right. And like the thing that Costco, right? It's kind of when we talk about AI, I don't know if AI is going to affect the Costco experience at all, right? We're talking retail. We're not. I don't think the AI era is going to really affect them as much as it will affect technology companies and so forth. So, all right, that's a review of Costco. Thanks for bringing all that analysis, Daryl. We'll look at Dell just really quickly. I know you're not feeling well, so we can kind of wrap it up after a few minutes on there. And it looks like Saeed is confirming. Got it. So only certain occupations, I guess people of professional stature can join Costco.
There he
I
is.
never knew that. Thanks for
No.
telling me that. We take it for granted here in the US. So Dell, what's going on in that? Ooh, up 4%. What's going on? And they're probably going to say that they're selling a lot of gear into that data center and all around AI. So let's see here. And here is their earnings. See if this is big enough. Nope, not yet. Let's make it bigger. So Dell Computer is, their legacy is they started when they made computers. Now they make servers. Their servers keep getting better, and they are probably teaming up with NVIDIA to make these servers really powerful and very useful in the AI build out. So let's take a look. And I think that was a little too big. All right. So first quarter revenue up 5%. Now, 5% in technology is like not much, especially in hardware, right? First quarter operating income up 21%. That is a nice number. Their profit did expand nicely. EPS is up 17% if we look at that quarter on its own. So the profitability is really good behind Dell. Their top line revenue, not so good. Now they're going to break this out. Infrastructure Solutions Group, this is the data center. This is where the growth is happening. People or companies ordering gear from Dell in order to build up their data centers. And then Client Solutions Group, I believe this is more the PC side, up 5%. So, all right, guidance, full year, FY26, they're going to be between 101 and 105 billion. So they're going to grow by about 8% top line. And again, that's, when you see NVIDIA put up numbers that they're growing at 60, 70%, and then you look at Dell and they're growing 8%, it's like, why is this exciting? It's not exciting. And when I go to the margins, you'll see that Dell doesn't make the kind of margins that NVIDIA makes. So it's a double negative. They're not growing that fast and they don't make a lot of money overall. All right, so they are expecting to be profitable this year nicely, so that's good. All right, so revenue grew 5% combined, all the revenue. And okay, so I could see the expansion in profits is good news. Now, I have a valuation of Dell, so we can update that, and I'll tell you what I think the stock is worth based on cash flows. We can also compare it to like a NVIDIA, and I'll point out why, Dell, hardware companies don't carry very high valuations because they don't make a lot of money. And, Dell's been around longer than NVIDIA, but NVIDIA is far more valuable, or even Broadcom's far more valuable than Dell. And Dell's been around longer than both of those companies. So cash is 7.7 billion. Short-term debt is 4.845 billion. Long-term debt 23.936 billion. All right. Cash flow. So this is for 3 months. Cash flow was higher at 2,796,000,000. CapEx 568. So that's a good free cash flow number of $2,228,000,000. Okay. And was this their first quarter? Is this what they call their first quarter? Yeah, that's what they call their first quarter. All right. So looking at stock analysis, just to kind of get some other fundamentals out there, and I'll make this a little bigger. It's a $77.5 billion market cap company. See how it trades at less than 1 times sales. That's the difference between a high margin business and a hardware business. These guys don't make a lot of money. PE is 17, forward P of 12. And I think some investors confuse these guys with, well, they're part of the data center, so they must be making a lot of money. Let's take a look. The cost of revenue is really high. The revenue growth at 8%, that's kind of okay, but not if the data center is growing so fast like we hear it's growing. They should be growing at 25, 30%. And when we look at gross margins, 22%, that's really low. If you go to the NVIDIA earnings, it was disappointing to see them down to 60. They're typically at 75. So very, very profitable business. Net profit margin, 4.8%. That's terrible. That's what we expect on a money market account. So this is why hardware companies, I try to avoid them. There isn't a lot of money left. Once you pay for all the components you have to put in these machines up here, cost of revenue, you have to buy the GPUs from NVIDIA, you have to buy chips from Broadcom or Qualcomm or Intel. You put those expensive components into the product, and you, as the assembler of that server or that laptop, are left with very little money. That's not a good business. It's not a desirable business. It's a low margin business. I don't like low margin businesses. I like high margin businesses. I get to pick the companies I get to buy. So those are always been the undesirables of Dell. So overall, I think I have a valuation of Dell. Let's take a quick peek. I don't. I usually price it, and right now it's priced too high. It's not a stock that I even want to track because it's hardware. Hardware companies will just constantly, here we're seeing the data center build out, and everybody got excited about data center. So Dell went up 330%. And I think when people realized, well, they don't make a whole lot of money, and then the stock started to really punish investors. But hey, they're making it go up again. So we'll see how that ends. But in my opinion, it's not going to end well because this is not a business that makes a lot of money. It's an undesirable business. If we look at like how I put companies in quadrants, I would put Dell in the gray at best, and at some point it's going to be in the red because of the margins. It's like, who would want to be in that business? I'd rather be in the NVIDIA business. I'd rather be in the Google business. I'd rather be in the Microsoft business. That's where I'd rather be. But Dell is working in the after hours. The stock is up, well, not as good anymore. It's 2.73. The stock is down 1.4% year to date. For the 1 year, it's down 31.58%. So it's not a pretty picture and not a business I want to be a part of. So any thoughts on that, Daryl, before we conclude?
No, Dell's never been in my portfolio.
The money, when it comes to hardware, is in principally 2 businesses. The software that runs on the servers, that's where the money's at. That's where the big margins, 80%, 85% margins are. That's how Microsoft became so darn valuable. And the second thing is the chipset. Whoever owns the IP that is in that CPU or GPU, if you're putting GPUs in the server, that's where the profit is. And Dell has to buy the components from Intel, Broadcom, Qualcomm produces Snapdragon now, and they have to pay NVIDIA. So, all right. So that is Dell. It's just some initial comments, but we wanted to focus on Costco. That was really good, Daryl. Let's do that again. We'll do some more watch parties in the future, guys, and we'll kind of cover a stock that we are seeing that their earnings are happening. Do me a giant favor. I'm going to put Daryl's YouTube channel in the description of the video. And maybe, Daryl, if you wouldn't mind, can you show your YouTube channel, please?
Sure.
And do me a big favor and like or subscribe to Daryl's channel and follow him. He puts a lot of time and energy into analysis. He's part of our Discord. He probably brings more content to that Discord than even I put on the Discord. So the Discord server. So visit his channel, subscribe, support his channel, because I think he's bringing a lot of value. And whenever you're ready, if you want to show your channel so people know what it's about.
I'm trying to get there.
All right.
Yeah, so I did my earnings preview on Costco a couple of days ago. I did a video on risk management, and that's where I covered the techniques that I use for getting in and out of stocks, mostly for getting out, and how I calculate the risk reward and my winning percentage. So anyway, pretty much focus on the companies that I hold in my portfolio.
And what's the name of your channel?
Just Daryl Pendergrass.
Perfect. So check that out, guys, and please go and subscribe to his channel. Lend him your support. He brings a lot of value to YouTube. He brings a lot of value to our community. So I want to make sure that he gets supported if possible. All right, guys, that is it. You're welcome. Thank you for doing this with me. We'll do this again. We just need more companies to announce, big companies to announce earnings, and we'll do it again. Everybody have a terrific afternoon, evening, wherever you're at, and good luck with your investments. And thank you so much for tuning in. We'll see you on the next one.
Thank you all. All right.